A very warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I'm Grace Agbarago. It's Tuesday, the 25th of November. We thank you for joining us at this time on the show.
All right. Off with your news now this Tuesday. At the AU-EU Summit, European Commission President Ursula von der Leyen addressed leaders on strengthening strategic partnerships between Africa and Europe. She highlighted collaboration on sustainable development, economic growth, and joint initiatives to tackle global challenges, reinforcing the EU's commitment to Africa's prosperity. Let's listen.
Global trade is more politicized than ever. Tariffs and trade barriers are being wielded aggressively. Export controls have become a tool to damage competitors and extract concessions. Global overcapacity in certain strategic fields has reached an all-time high. This is harming industries on both our continents, with consequences felt deep inside our societies. In this new reality, Africa and Europe are called to answer the very same questions. How can we create good jobs for our people? How can we deliver on the aspiration of our youth? How can we de-risk and diversify our economies? How can we break free from unsustainable dependencies while ensuring access to capital, resources, and technologies we need? Excellencies, fellow leaders, I believe that many of the answers lie in our partnership. In a more confrontational global economy, Africa and Europe need each other more than ever before. And this is what brings us here to Luanda. Today we can look back on the progress achieved since our last summit, but more importantly, we will look forward to new opportunities to work together. As old friends, but also as trading partners, investment partners, business partners, we want Africa and Europe to be partners of choice.
In earnings news, Standard Chartered Bank Kenya has reported a sharp drop in 9-month profit, with after-tax earnings falling to 9.79 billion Kenyan shillings in September 2025. The decline reflects lower interest and non-interest income, rising operating costs, and additional pension payments of 7 billion shillings to former employees. Interest income fell to 22.27 billion shillings, non-interest income to 10.16 billion shillings, and EPS dropped 38.5% to 25.57 shillings. The loan book shrank to 146.6 billion shillings as investments shifted to government securities. Non-performing loans fell to 9.13 billion shillings and total assets rose to 384.4 billion shillings. In Nigeria, the central bank has held interest rates steady, keeping the benchmark rate at 27% despite expectations of cooling inflation. The Monetary Policy Committee made the decision at its meeting held earlier today, signaling a cautious approach to supporting economic stability. Here are excerpts.
The committee decided by a majority vote to maintain the current monetary policy stance, with an adjustment to the corridor as follows. 1, retain the monetary policy rate, MPR, at 27%. 2, adjust the standing facility corridor around the MPR at plus 50 to minus 450 basis points. 3, retain the cash reserve requirement, CRR, for deposit money banks at 45% merchant banks at 16%, and 75% for non-TSA public sector deposits. And 4, keep the liquidity ratio unchanged at 30%. This decision was underpinned by the need to sustain the progress made so far towards achieving low and stable inflation. The MPC reaffirmed its commitment to a data-driven assessment of developments and outlook to guide future policy decisions. Considerations. The committee welcomed the continued deceleration in headline inflation year on year in October 2025 for the 7th consecutive month.
In South Africa, Cell C has raised just 2.7 billion rands of the 7.7 billion rands targeted in its initial public offering, with investors buying only 55.8% of the shares on offer. The company sold 102 million shares, representing 30% of its total ordinary share capital, at an offer price of 26.50 rand per share, implying a market capitalization of around 9 billion rand at launch. The final valuation will depend on trading when the stock hits the market. Cell C will list on the JSE main board on Thursday, November 27, 2025, under the share code CCD. In Kenya, Safaricom has opened subscriptions for the first tranche of its 40 billion Kenyan shillings medium-term note program, offering up to 15 billion shillings in green notes with a 5 billion shillings green shoe. The 5-year senior unsecured notes carry a 10.40% fixed rate and will fund eligible green projects. Books opened on 25th November and closed on 5th December. Allotment is scheduled for 8th December, with the notes expected to list on the Nairobi Securities Exchange on 16th December 2025. Finally, on news now, Singapore will open its first East African embassy in Addis Ababa by 2027, marking a major step in deepening ties with the continent. Prime Minister Lawrence Wong announced the move during the first bilateral visit to Africa after meeting Ethiopian Prime Minister Abiy Ahmed. The mission, Singapore's third in Africa after Egypt and South Africa, aims to boost trade, investment, and engagement with the African Union. The two countries also signed agreements on skills development and carbon market cooperation, aligning with Ethiopia's preparations to host COP32 in 2027. The embassy is expected to strengthen a win-win partnership built on Ethiopia's growth potential and Singapore's expertise in finance, technology, and sustainability. I am Melissa Enoch, and that's it on News Now this Tuesday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our market updates. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's market update. Hello there, Grace.
Thank you, Melissa. Let's now track how the markets rounded up today, starting off with the equities. The Nigerian Stock Exchange advanced by 0.10%, while the BRVM slipped by 0.01% to 343.63. The Nairobi Securities Exchange fell sharply by 1.93% to 182.52. In South Africa, the Johannesburg Stock Exchange gained 0.63%, while the Zimbabwe Stock Exchange also gained 0.89%. And in North Africa, the EGX30 advanced by 0.45%. Let's do a quick round on some of the Pan-African currencies. The rand strengthened 0.32% to 17.24 against the dollar. The Egyptian pound gained 0.16% to 47.80, while the CFA franc firmed 0.25%. The Kenyan shilling inched up 0.06% to 129.70. The Moroccan dirham slipped 0.18%, while the naira appreciated 0.10%, trading at 1,452 naira 78 kobo. Let's switch into the commodities data deck, beginning with energy prices. Energy prices were treated today with Brent crude falling 0.38% to $63.13, while US WTI declined 0.36% to $58.63. Natural gas dropped 3.23% to $4.40, and Arabiobi gasoline is 0.30% to $1.89 as of 12:35 GMT. Finally, two soft prices. Cocoa fell 2.62%, while coffee slipped 0.57% to $374.40. Cotton gained 0.53%, while palm oil declined 1.50%, and sugar rose 0.81% to $14.94 as of 12:48 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for letting us know how the markets rounded up today. And that's it for today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.